Thanks for clicking! The London and St. Thomas Association of Realtors, LSTAR, has released its data for the month of April, showing a real estate market that is moving heavily in the favor of the buyer.
Don't get too cocky.
Indeed, as we'll see today, sales remain slow as potential home buyers stayed largely on the sidelines. And while the market is definitely moving in the favor of the home buyer, more so in the favor of the home buyer than we've seen for the past 10 years in April, fear not, our own local media says that 40% of buyers are planning to buy in the near future, pointing to a poll that we talked about a few videos ago out by BMO, saying that 72% of home buyers are waiting for interest rates to drop. But how reasonable is that assertion? Is it really just interest rates that are keeping buyers on the sidelines?
What else could it be?
Yes.
So what I want to do today is go over London's real estate data for the month of April, take a look at that poll that is so widely circulating, saying that home buyers are just waiting for interest rate drops before they pile on into the market, and then discuss some implications for London's market going forward. Whether or not those policy cuts are coming will be largely dependent on Canada's inflation rate, which is set to be released on May 21st. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into April's data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features. And the benchmark price was up, though very, very marginally. The benchmark in March was sitting at $602,700, and that increased by $100 to $602,800 in April. So the benchmark price is up $100 since last month, but down $4,400 since this point in time last year, when the market appeared to be taking back off, and FOMO was the narrative of the day.
Why don't you believe me?
With that said, the average price of a home was up much more substantially month over month. The average price in March was $633,000, and that jumped almost $15,000 to $647,600 in April. So the average price is up about $15,000 from last month, but down about $15,000 from this point in time last year. And the median price jumped up as well. The median price, if you'll remember, that's where half as many homes sell over that price and half as many sell under. The median price in March was $589,500, and that jumped almost $26,000 to $615,000 in April. So the median price up about $26,000 in April, but still down about $5,000 since this point in time last year. And the relative stability in prices make more sense when we look at the sales to list price ratio, which measures by how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $98,000, the SLPR would be 98. London's SLPR in March was 99.2 and inched up to 99.7 in April. So, on average, homes are still selling for about 0.3% below their asking price.
Commission accomplished.
And finally, the months of inventory measurement, the MOI, which measures if no more homes came to market, how long would it take for London to completely run out of homes for sale. The MOI was up in April. March's MOI was sitting at 2.4, and that bumped up to 2.6 in April. So, London actually saw an increase in the amount of relative inventory in April, which is now, save COVID, sitting at its highest level that it had in April for the past 10 years. So, the benchmark price is up $100, the average price is up about $15,000, the median price up by $26,000. Homes are still selling for under asking, though less so, and we have the highest amount of relative inventory for April, save COVID, that we've had for 10 years. And it's not just the MOI showing a market that is moving in the favor of the buyer. If we look at the sales to new listings ratio, which measures how many homes are sold versus how many homes come to the market, it's at its lowest point that it's been in April for 10 years, now sitting at 50.5, down from last month's 54.7. That means, in terms of negotiating power, buyers haven't had it as good as they had it in April for the past 10 years. That means...
Don't you dare!
That means buyers can and should have finance conditions. Buyers can and should protect their financial interests. So, the benchmark price is basically holding steady. London has a lot more inventory coming to the market, especially relative to that of sales. And the local media and the local usual suspects are turning to a poll conducted by the Bank of Montreal to say that this very well could not last long, as the poll found that 72% of home buyers are waiting for interest rate cuts before buying a home, with 40% of buyers planning to buy in the near future.
And you know what that means, don't you?
Well, it doesn't mean much, as only 13% of potential homebuyers plan on buying in 2024 when those interest rate cuts come. The other 26% of potential homebuyers plan on buying in 2025, and here's the key, or later. Later could mean 2025, 2026, or 2035. The poll was conducted in such a manner that we just don't know.
Not at all what I intended.
The only usable data we have from this poll is that 13% of homebuyers could re-enter the market when interest rate cuts come. But I digress. I went over this poll in another video, and as many commentators pointed out, it might not just be interest rates that are causing homebuyers to wait on the sidelines. It could very well be prices. So let's test it. Let's test it using the admittedly scarce data available to us to test whether or not buyers in April were any more or less responsive to interest rates than they were in April of last year. Let's test it using evidence.
I don't know what that is.
In April of last year, bond yields were incredibly low, brought on by the SVB crisis, sitting at 3.1 in mid-April of last year. Fast forward to this year, and bond yields have shot up, sitting at 3.78 in the middle of April of 2024. A decent 5-year fixed insured rate was sitting at 4.49 last April, and as of a few videos ago, was sitting at 4.99 in April of this year. So, homebuyer demand, based on the argument that lower interest rates bring back homebuyers, should have been higher in April of last year. Last year, in April, we had 484 sales, and fast forward to this year, we have 495. Barely a difference to speak of. So, interest rates, fixed rates, which we'll get into in a second, were 50 basis points less last year, and we didn't see any more demand last year than we saw this year. We saw less supply come to the market last year, which put upward pressure on prices, but we didn't see any more demand brought on by lower rates. But what about the demand brought on by last year's 4.49 compared to previous non-COVID years? Even then, demand wasn't all that impressive, with sales far lower than they were in any previous April save COVID for the past 10 years. So, does 50 basis points in rate cuts bring that much demand back to the London market? The data, though admittedly we don't have a lot of it, certainly doesn't say so. So, let's go back a little bit further. Let's go back to 2019, prior to all of the craziness, or complete normalcy brought on by economic fundamentals, as argued by those experts with large car payments. Back then, the average price, LSTAR didn't report on the benchmark price in 2019, was sitting at $429,000, or about $220,000 less than it is 5 years later.
Probably is normal, but...
Back then, we had 702 sales, and a decent 5-year fixed rate was sitting at 3.49. So, what was it that brought buyers out in 2019? Was it the 3.49 interest rate, or was it the $220,000 less average price than we have right now? I don't know, and no one else does either. The mortgage payment on that average priced house in 2019 was about $2,000. Fast forward to 2024, that same house, even if we see 150 basis points worth of rate cuts and have a 3.49 interest rate, that payment would now be sitting at $3,000. Wages are only up about 16% since 2019, whereas the payment on that house is now up 33%.
What's that got to do with anything?
And that 3.49 is a great big if, especially with the Federal Reserve indicating as of recent that they'll be keeping rates higher for longer. And until the Federal Reserve moves, as we've talked about so many times on this channel, expect fixed interest rates to remain high. And even then, when the Federal Reserve acts, depending on the conditions, we'll see how investors react.
Tell me about it.
So, if fixed rates are going to be staying relatively elevated for the remainder of the year, and a decent insured variable rate mortgage is sitting at prime -1, then the Bank of Canada would have to cut rates by 125 basis points to make that variable rate worth it. Are buyers really going to jump on that variable rate train so quickly after we've seen all of the headlines over the past few years, pay the initial premium to do so while they wait for the Bank of Canada to cut rates, all in the hopes that this time the experts finally know about that which they are speaking?
I think we know what we're doing.
So, the benchmark price in London up only by about $100. The average and median prices are up, but still not up to where they were at this point in time last year. London is more in the favor of the home buyer than it's been for the past 10 years. Though we are hearing that that's only because a majority of would-be homebuyers are waiting on the sidelines for the Bank of Canada to cut rates, with the implicit argument being that when that happens, when the Bank of Canada does cut rates, we'll see a flood of homebuyers enter into the market. Though, as we saw last year, 50 basis points lower than we had this year did not equate to any more sustainable demand. How this all plays out remains to be seen. I don't claim to know how it's going to play out. I do claim to know that no one else knows either. The one thing you do know is your budget. So, as always, as to whether or not now is the time to buy, the main thing you want to look at is your budget. Is it the right house? Is it affordable? Are you comfortable with the rate and the price? If not, then don't buy. If so, then maybe it's worth considering. How this all plays out definitely remains to be seen, but we'll obviously continue to track the London market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.